Welcome to UDIG's LinkedIn Live event. Good morning to everybody that is on. Reid and I are excited to do this today. So quick agenda for today. We'll do some introductions and tell you who we are, and then we'll go through some quick administrative items, and then we'll jump into why everyone is here, which is really around how do you leverage AI to drive profitability in insurance. So I'll go first. I'm Gordon Kelly. I'm EVP of our vertical markets here at UDIG. Been with UDIG for 18 years. It's been an incredible ride to see how the company's grown and evolved and some of the talent we've been able to attract to the organization. My responsibility is leading go-to-market for a few of our key verticals, one of which is insurance. And I'm really passionate about working with delivery leaders like Reid to make sure that we're driving business value for all of our customers on all of our projects and finding cool, exciting projects for our delivery team to work on. So that's a little bit about myself. I'll kick it over to Reid.
Yeah, thanks, Gordon. I appreciate it. Like Gordon said, my name is Reid Colson. I lead the data and automation practices here at UDIG. I describe myself as a 25-year data nerd. I've been here at UDIG working with the data team for about 2.5 years. I've spent 13 years at Capital One, really on all sides of data, and for the 6 years prior to joining here, I was the Chief Data and Analytics Officer for Markel. I really kind of got into data by accident and stayed because I feel like every day is a treasure hunt, and I'm excited to talk about AI and insurance today.
Cool. So we were taking some bets on whether Reid would insert his usual snarky comment about who's the better golfer between the two of us, and he had that in his title at one point. So that was good, Reid. I actually lost on that one. But as you can see, we're going to try to keep this informal. This is the first time we've ever done one of these, so bear with us if we trip up. We were live in the waiting room, and so if you were on, you got exposed to some of our fun commentary. So apologies for that, but we're quick administrative items, questions, right? We're hoping this can be engaging, so please drop questions in the chat. My personal goal is to try to have somebody trip Reid up and stump him. I'm not sure that's going to be tough to do, but please help me there. We'll stop and answer any questions as they come along. We only have 30 minutes, so we want to make sure we can cover everything, and especially the use cases on why you're here today. Those use cases will be sent out to everybody after the event. And lastly, if you click follow, we're going to make you hit that follow button if you haven't already. The recording will be available on our LinkedIn page as well. So let's shift to why we're here today, leveraging AI to drive profitability. We've got 3 cool use cases that we've seen in real life. But before we get started, Reid, everybody's talking about AI. It's everywhere. It's in the news. Everybody's heard of ChatGPT. We heard about the whole OpenAI fiasco. So let's take a quick moment to just define what AI is in your opinion and why it's more than just a ChatGPT.
Yeah, thanks, Gordon. I appreciate that. Obviously, everybody knows AI stands for artificial intelligence. In my mind, it's really a broad term that refers to any kind of technology that can mimic human intelligence. And it can learn from data, it can identify patterns, it can make predictions. When you're talking about ChatGPT, that's a large language model. It can generate text, it can translate language, and it can write kinds of content in a very creative way. It's a powerful tool, but it's only one example of AI. What I do like about it is it's got people engaging with AI in a way that they start to see the benefits of using it to help them with things that they want to do. But beyond ChatGPT, there's a lot of things around machine learning, computer vision, and NLP that we see in practice regularly with insurers. So, at its base, large language models are typically a neural net that's trained on a massive amount of data, and they can generate, human quality text. They can hallucinate too, depending on what data that they were provided. And maybe contrasting that, machine learning is an algorithm that can learn from data. And it can be used for things like image classification. Is this a dog or is it a cat? It can be used for natural language processing. So can I identify what a certain piece of text is and what it means. And then it can be used for business use cases like the things we'll talk about today. And a common example is identifying potential fraud or suspicious claims.
Cool. Yeah, that's helpful, helping frame AI for the purpose of this conversation. So we're going to jump right into the use cases. We've got three important pieces of the insurance lifecycle. We're going to start with submissions. So specifically around submission triage. Can you give us your perspective and overview of how AI can enable submission triage?
Yeah, certainly. Submissions are the sort of lifeblood of an insurance business. It's how they generate premium. And submission triage is really the process of reviewing and prioritizing insurance applications. This can be done with manual judgment, and it can be done with AI. AI can be used to help automate significant portions of that process, freeing up underwriters to focus more of their time on those items that have the highest expected value for them. So you can use AI to look at various aspects of what comes across in the submission to try to understand how likely is it that you're going to bind it? How well does it line up with your appetite? Is it from producers where you have a really strong historical relationship? And a number of things like that help you quickly evaluate of the submissions that are in your inbox or in your queue, which ones would be the most valuable to work right now. It also helps you not spend a lot of time on those items that might have lower value to your business.
Yeah, that's helpful, and especially around getting the most bang for your buck and your best underwriter attention. What evidence have you seen to support that drives the business value for submission triage? Can you talk a little bit about that?
Yeah, certainly. And so, one carrier that we worked with did project prioritizing submissions based on a combination of, expected value and a number of other key business levers. And they drove a 3x increase in their new business growth rate relative to what it was before in other lines that were not using submission triage. They also found they had, higher average premiums and a higher percentage of their targeted class codes within the portfolio that they were writing. So, out of this, they got increased bind rates, they got higher average premium, and we expect over time lower loss ratios because they're targeting more of the types of business that they preferred.
So with all of that in mind, can you talk, if someone's sitting here listening to you today, what do they need to do to get started to enable submission triage?
I mean, the first thing I would do is, obviously spend some time with the underwriters and understand the business process, understand the judgment that's going into the decisions that they're making, because those are important clues or pieces of information that will help you think about what data you're going to gather to try to analyze the submissions. There is a lot of insight that comes from, 10, 15, 20 years of doing this work that if you can replicate through data will help, support providing a better output. Ultimately, what you're going to need is you're going to need some historical data on, your bind rates, and you're going to want that by producer, by product, by region. You're going to want to look at loss ratios related to different classes of business. You're going to want to look at the submissions and look at quotes and binds, so you can start to develop a prediction around, bind rate for various attributes within submissions, and probably things like class code profitability by product. So you'll put all that together, but then you're also going to think about, once I have this prediction, how do I deploy it back into where my folks are working? So you'll also want to spend a little bit of time with your application owners and your IT organization to think about how this works into the business process or might change the business process in a way that will make the overall process of, quoting on submissions and binding them more effective and more efficient over time.
Yeah, that's cool. Thank you for that summary. And Jennifer posted the use case in the chat. If you have any questions about it, feel free to pop something into the chat and we'll come back to it. Make sure we address it before the end here. So that was the first use case. We're going to shift to the second one around policies, right? And specifically around policy retention optimization, how it drives profitability. Can you talk a little bit about that one?
Yeah, sure. I'll start with like maybe a little bit higher level view first, right? I know, from experience, most, carriers, insurers are looking to, grow their book of business. And one of the most common ways you could grow your book of business is really to stop the attrition that's happening within it. And so the notion of policy retention optimization is really around having a strategy for your existing book of business and being able to optimize those policies that you're attempting to retain. And so a couple of things would go into this. And it's one, looking at the information that you have available and the historical patterns of attrition and risk to identify prior to policy expiration what policies are most likely to non-renew or not renew. And doing that 60 to 90 days prior to expiration gives you an opportunity to take action or to apply strategies that could help you retain those accounts or customers that you want. It also allows you to spend some time evaluating whether or not you want to retain them. And so not every policy that's not going to renew is necessarily a policy that you want to retain. So if it's something that looks like it's unprofitable, it's a section of business that you're trying to get out of, it allows you to be very targeted with your strategies. But once you have that list and you understand, let's say you've broken your pending expirations into 10 different buckets, going from least likely to renew to most likely to renew, you might find maybe those 3 buckets at the bottom that account for maybe 30% of your policies that are very unlikely to renew. You can take strategies where maybe it's simple outreach, maybe it's something around rate, maybe it's something around premium audit that you could do to encourage them to stay with you. The other benefit you get is when you think about insurance profitability, a lot of it's around cost of acquisition. So it's going to be a lower cost of acquisition to retain that customer than it would be to go out and write a new piece of business that is the same size of that business were it to go away.
Yeah. Yeah. So talk a little bit about the AI piece, right? So if folks are interested, like how does this actually use AI when you're talking about retaining profitable policies?
Yeah, so it does a couple of different things, right? It'll help you look at historical patterns of attrition to predict which policies are most likely to non-renew, and doing that in advance of expiration. Through that, if in cases where we've done it before using like a boosted random forest, you could also start to identify what are the drivers of potential attrition and kind of bake that into what you think about in terms of your lifetime value of customer and what you're targeting with some of your new business as well. So you can get those benefits through when you first sign up the client. But essentially what it's going to do is it's going to look at the historical data. It's going to evaluate those things that are identified to be most related to drive likelihood of non-renewal. And what I would say in this is not a deterministic outcome. It's not going to tell you Gordon is going to non-renew, Reid will renew. It's a probabilistic one, and it's going to say, hey, Gordon is less likely than Reid, and it allows you to take some strategy to increase your chances. You're going to need historical data on policy expirations, retention, and then policy details like premium size, rate, cover, maybe any claims, relationships with brokers, and you kind of feed that into the model to be able to help you identify, again, those that are least likely to renew.
Right. And that data's got to be clean and well organized as well. That's great. So we've got one more use case, and then we've got a couple questions that we'll address. And again, just a reminder, please feel free to drop questions in the chat. Certainly follow up afterwards with Reid and I. So that was submissions, policies. We've got a use case around claims as well. So talk a little bit about claim severity prediction and modeling and how AI uses that to enable drive profitability.
Yeah, certainly. And, this comes from, thinking about claims in 2 ways, right? You have expenses related to the loss, and then you have expenses related to the adjustment of the claim to be able to pay your claimant correctly. So again, claim severity modeling is going to allow you to identify sometime around the first notice of loss, those claims that are most likely to be high loss expenses for you. Essentially, the claim severity prediction process would use AI to analyze your historical claims data and identify patterns that influence the financial impact of insurance claims. In this case, often there's really rich information in the claims notes. And so, an example would be something like bodily injury. You can look in the claims notes and you can identify maybe something that helps you understand how expensive that claim is going to be, right? If it was maybe a broken finger versus something that's going to have a lot longer care and more expensive, maybe some kind of traumatic brain injury. Those sorts of things are often in the notes, and it can help you identify those things that are most likely to be severe. But it's just one piece of the puzzle. So you're going to look at a number of other things as well. You can do evaluations of whether or not it's a covered peril. You can do evaluations of, is this above or below the deductible? And so once you take the clues around the claim, around the policy, and around the notes, then you can put together this prediction of how likely is this claim to be, very expensive for the organization, or maybe something that is a lot less expensive. And maybe my strategy might be, let's try to focus on customer service and managing the adjustment expenses so that, we give a great outcome to the client. It happens very quickly for them, and we minimize the expense to our organization in handling that claim.
And this one's got a really cool business value case here. Can you talk a little bit about that?
Yeah, I mean, and again, think about this. It goes into helping you with some of the strategy you have around claims routing. And so one insurer that we know was able to identify that 10% of their claims drove 60% of their ultimate loss, in this case on bodily injury. They also found that the lowest 30% of claims accounted for only 2% of their ultimate loss. And so what that did is it gave them confidence to be able to say, hey, if I put a little bit more automated process that's going to expedite those that are identified to be likely to be low severity, I have very little risk in doing that. And my upside is a couple of things. One is I'm reducing the loss adjustment expenses for those claims that are likely to not be very severe. I'm also expediting the process of getting those customers paid, which is great from a customer service perspective. But then it also allowed them to make sure that they had the right talent on those claims that looked like they were going to be much more severe, and do a better job handling those as well.
Yeah, and that's helpful. If you're a sponsor, who would this resonate with? Like, what typical sponsor would pay for a project like this?
Yeah, I mean, so typically this is going to be maybe one of the following, right? Your chief claims officer is going to be very interested in this kind of thing. Sometimes the insurance product leaders, so the vertical, again, managing how the claims expenses impact the bottom line is interesting to them. CFOs are often interested in it, and chief actuarial officers are often interested in it. Those are often good targets for proposing this kind of project.
Cool. All right, so those are the three use cases. We've gotten a couple questions submitted. But before we dig into the attendee questions, we've heard from a lot of folks that we've talked with that sometimes they have trouble getting their models adopted, right, and trying to actually drive business value. So if someone's on the event and has had trouble getting a model adopted, what advice would you give them?
Yeah, I love this question. I've learned this one the hard way. I think sometimes when you get into the space where you're doing modeling, it becomes this math versus judgment sort of conversation. And folks have built really good judgment around their business process over 10, 15, 20 years of working. And so one of the things that's really important to me from an adoption perspective is to involve those that are going to be either using, benefiting, or being impacted by the process change. So let's take submission triage, right? That's something where you're going to be working with a group of underwriters. If you go into a dark room and you build the model and you come back and you say, hey, here it is, and it's better than you. I wouldn't be surprised if they spent a significant amount of their time trying to find ways to break it. And they will find cases where their decision would have been better than the model because they're looking for them. But on the whole, the model should perform better. I would say that involving them early, allowing them to provide their input into what makes sense, and then showing them how that was used in the actual build itself helps make this a little bit less of a black box. It helps them understand how it works. It helps them feel appreciated from their judgment, and puts them in a position where it's more of a partnership and they're willing to use it and also provide valid feedback to you how it might need to be adjusted, because sometimes you're applying different weights to different pieces of the business strategy, and sometimes those need to get tweaked. And so you build that partnership where folks, again, feel like their input was appreciated and valued, and they understand a lot more about what goes into it and how it can provide benefit to them in their day-to-day role.
And speaking of that, we hear from, in a number of our conversations, we hear from insurance leaders that are enabled to do advanced analytics, right? To leverage AI, and then there's a number of them that are nowhere near that. It seems like a pipe dream, and it's so far down the road. Talk a little bit about, if you're an insurance leader that's interested in AI and you don't already have it or have little pockets of it where you're testing it. What advice would you give to someone looking to get started?
Yeah, I think there's a few things that need to come together to be effective in, using AI, predictive modeling, in data in general. But the first is, you go at it with a hypothesis, right? Like, don't go at it with, this is magic, I'm going to throw it at something and it's going to figure it out, right? I need to basically understand very clearly, what is the business domain that it makes sense to apply it in? What is my hypothesis or theory around, how the prediction would help me do something with my business? And then be able to think through, like, all right, what are the things that I need to be able to do that? Well, one of the things you're going to need data related to that use case. So, we didn't talk about fraud prediction, but if you're going to go into, hey, I want to do fraud prediction so that my investigations teams maybe have a more targeted group of claims that they're evaluating. Well, one of the things that we found historically with this kind of work is the special investigations unit don't often declare something as fraud. So there's no historical data to go back and train the model on. So you may need to go and start to say, all right, on these investigations, which ones did we think were fraud? Which ones did we end up paying? Often it will be, was there some sort of police report filed about it? So really understanding, one, sort of what the business domain is, and being able to have a plan in mind on how you want to apply the AI. Two, making sure that the data will support that use case. And then three, it's really, how do you deploy, right? That, I call that the last mile. Sometimes it's easier to build than it is to deploy. So how do you get that back into the hands of the people that need to use it, or the systems that will use it to make decisions? And so the last piece is involve the IT groups early on, because it's often a handoff between a data organization and an application team to be able to take an outcome from a model and put it back into business process in a way that you're not adding yet another screen for somebody to take a look at while they're doing their jobs.
Cool. Yeah, that's helpful. All right, we've got a live question that came in. Have you seen a feedback mechanism implemented in a reporting solution? So the example they're using is submission triage models built. It shows a queue of most likely to bind, focuses on those policies, but then give the users the option to give feedback on if they agree on the score. Can you talk through some of the challenges of who is right, the model or the underwriter?
Who's right? This is a great question. I kind of have two answers on this. The place where I've seen embedding the predictive insights into reports is often on the pending expirations report. So a lot of companies will have this report that is a pending expiration report that underwriters can use to evaluate work that they need to do on their portfolio. I've seen many cases where folks have been able to embed the likelihood of retention score in there, so that underwriters can sort and come up with strategies to approach the book in an efficient way. They may need not to go spend a lot of time on those that are highly likely to renew, but they may want to get out in front of those that are unlikely. Excuse me. On the providing feedback piece, where I've seen that the most is in, I'll say, early deployment and validation. So instead of building a model and then just turning it on live, one of the best practices I've seen is to be able to hold some workshops with the underwriting team. So in this case, say submission triage. What you might do is, run the model for a period while the old process is still working, and then sit down with the underwriting group and start to compare, hey, which ones did you pick versus which ones the model picked? And which ones would the model have said not to work, and was that right or wrong? And then which ones did you not work that the model would have said, and review those. And often what you find is there's something that is an insight that the underwriter might have had around why one was good to work that you didn't quite bake into the model yet. Or you might find maybe we overweighted the producer relationship in the ensemble model that we put together. We need to tweak the weightings on some of those things to get the order in a way that makes more sense to the underwriter. So, I think it's honestly on who's right. It's often a submission by submission, not overall in general. But I'd say, to me, the best outcome is to be able to get to where there's trust in the model itself and it gets used. If you get into the battle of who's right, I think often folks will shut down and just not use it, and it doesn't matter if it's right.
Yeah, that's good. I hope that answered the attendees' question. Happy to follow up and have an additional conversation on that as well. We've got 3 minutes left. I know folks are busy. Just closing out, again, back to ChatGPT. It's gotten a lot of press. I'm curious your talk or take on how companies are embracing the tool, what risks they're still going to have to deal with. I know you have a perspective on this, on real AI versus marketing AI.
Yeah, well, it's really two different questions, but I think on ChatGPT, right, what I saw early on was some fear, right? Organizations basically put out policies that said you can't use it. And I think they were right in doing that, because there were a few things that were risks that they didn't really have transparency out of control. One was, am I taking corporate data and putting it into a tool that could be using it or exposing it in some way that I don't like, right? So there's some data protection around that. Second is that, again, the tool can hallucinate and it can give me wrong answers. And we don't have good processes or policies in place to be able to validate those outcomes before we start using them. What we're starting to see now is more enterprise-ready answers where you can sort of containerize the AI LLM application, whether it's ChatGPT or something else, be able to train it on your own data and be able to use it in a controlled environment. So we've seen examples where it's like an internal guru that you can get answers to. So it's a more sophisticated way of searching for a document or searching for an answer, where it might have been let me send the email out to the whole company and say, hey, does anybody know where I can find X, right? Those are some interesting early use cases that we're starting to see with the LLMs providing administrative support and lift for folks internally. And then your second piece was, where do I get hot about AI? I'll maybe close with this, which is I see a lot of marketing spin on AI. I go to conferences and I walk by booths and I talk to somebody about their product, like, well, we have AI embedded in it. I'm like, well, what does that mean? And they don't know. And often I think it's more marketing than reality. And so I'd encourage you, right, if you're talking to somebody that's a vendor and they're saying, hey, we got AI in this, go deeper, find out what it is, what it does, how it uses it, how it actually helps you, see if they really know or if it's just marketing spin. That's the one piece to me that, I'm excited that this is bringing light to the power of data, but I get a little frustrated with some of the spin doctoring and marketing that goes around it that may or may not totally be there.
That's excellent. I know you have strong feelings about that and talk about them often. We've got about 30 seconds left. Really quickly, like back to someone trying to get started, right? How would your team be able to help with some of those recommendations you mentioned for someone that's early stage?
Yeah, I mean, we love getting involved in talking about, what's possible, what are the use cases, how do you run your business, how might AI be able to help? So I feel like it's just another set of eyes at the table that we can help understand where you can monetize data. And often that may not be AI, it might be a report or some other type of analysis. But, one, helping envision those use cases, some of the ones we've talked about a lot that we didn't. And then the feasibility, right? How easy is it going to be to do? Is the data available? What would need to occur for you to be able to deliver on it? As well as, what size result might you expect? Is this something that's going to bring in significant benefit, or something that's, it's nice, but it's not really going to be a needle mover for us? So those are all the kinds of things that from a conversation we could help organizations do, and then develop a plan to execute against those things that are likely to be one, outsized benefits, and two, achievable in the relatively near term.